Alrighty, welcome back to or plus. Welcome. Let's go ahead and do this real quick. So that way at least these two are still up. We're gonna do that. Let's check news. See what's happening over there. Boom, 8:30 for those. Oh, hello. Cool. So both of these have already come out. That's alright. Market is not open just yet. Let's go ahead and take care of this real quick. Boom. If you guys were watching the last video, you know I attempted to pardon me, I'm waking up still. You guys know that I attempted to take a trade in the PM, which is something I don't usually do. Um, did not work out the way I wanted to. Could not find a trade, and that was primarily because I'm not used to trading in the PM, right? Just not used to it at all. I like that there's a little bit more price action with all that's going on right now. Much easier to read at the moment. So our idea was correct last trade yesterday. Our idea was correct. Look at this. 4 hours. Price did go higher. We have another fair value gap. We're in retrace. Value gap. Price goes higher. We're in retrace. Okay. We have an order block here on NASDAQ. So I'm learning something new based on what I have already. Most of my stuff I've learned from TJR, right? That's secondhand smart money concepts from inner circle traders. Inner circle trading, ICT, there we go. And I have learned through other sources that they are not reputable for some reason. They just aren't. And as a result of them not being reputable, I decided, okay, well, if they're not reputable, I'm gonna ask around. I'm gonna see what I can find, reputable source wise. And I found one. I found one by the name of auction market theory. But there's a problem. I found a real detailed article that said apparently to use all these different indicators on the chart to better define, to better govern how one trades. Well, I know not to use 100 different indicators I know nothing about. I know volume controls the market. Where there's a lack of volume, market's not going to move much. And where there's a bunch, well, you're going to have movement. You're going to have it. It just makes sense. Here's a low. We have not broke structure. We're still in an uptrend. We almost called that a fair value gap. We have a fair value gap right here on the red, right? This says price might continue lower. We'll see that here in a little while. Let me actually show you guys what I've been going with. I know I might get flamed for just going to Reddit, but you'll see what I mean here in a second. This right here. So I essentially posted this yesterday trying to confirm whether or not these notes right here were accurate, right? And you could see them literally above the webcam. Trying to figure out if these right here were an accurate set of notes that I could reference. And while the conversation has come on down, essentially, I've pretty much discussed my entire setup with these guys. This guy made a good point to compare the two, and it's like comparing apples to oranges that are carried by the same fruit truck. And I agreed with him. It made sense. And then I like watered down what I got to see on the charts. I don't know what this guy was on about. And then this guy actually came out with essentially what I've been going with, auction market theory, right? He's like, yeah, um, ICT isn't a non-reputable source, but SMC is. See? And I go further and further into saying essentially all this. And this guy said, yeah, he's played around with correlation before. And that he'll give it again, give it a whirl again today. So maybe, we'll see some responses here. I don't know. This is the current conversation, though. All to see if this is correct or not. Trying to master the understanding of essentially all of this. So, wow. On one post. But yeah, we're gonna stay on this site though. We have 15 minutes for market open. General trend is up. The day is up. 4 hours up. No breaks. Except for right here ish. That's not a break. That's okay. That's what checking it. That's what doing that was for. That's an uptrend with the fair value gap saying it'll go higher. And it might come back down. This is an all-time high. The 1 hour, something else. Huge moves all the way up. Good, good. Way higher. Move down. Bottom. Here's our low. It's below this, sure, but it's still in an uptrend. Let's take a look at this. Same story here on the hour. All right. We had a mini break of structure here, making this an order block. Prices come back down, closed within this order block. We could see it continue higher, this being a breaker block and all. Could see it form much higher. On the hour, we had an inverse for value gap. With a new fair value gap formed to the downside. Like, I want to see if I could take shorts from this. We'll keep on this to really determine where it manipulates. But we get a liquidity sweep, I should say. Because we already swept out this low here. It's just the key level from this current move down off of London session. Looking to see one of these two get hit first. Once it does get hit, we've seen that sweep confirmed there. We'll look for the rebound, retrace back up, and then catch the trade high and watch it fall. Because right now our equilibrium looks something like this right here. We have yet to break structure, but we have inverted that fair value gap on the 1 hour and the 30-minute now. The 4 hour saying we're in an uptrend still, but Here's our inverse. On the 4 hour. 4 hour says we're in retrace. We haven't really inverted this fair value gap on the Asian session yet, though we are still in retrace. We did break structure here. We have an order block there. Price disrespected it, continued higher. Sure enough, we broke structure here. Order block, price came down, respected that order block, this red candle here, and then keep going higher. Fair value gap signals, push higher, boom, fair value gap, retrace. Daily's just a straight green line all the way up with one retrace being this right here. And then of course the hour's the same way. We had no break of structure really, just move down, up, down, cool. We had our low way down here, no break, move up, cool. Continuation. This is a break of structure right here. I think we've actually determined that this wasn't a break of structure on the NASDAQ. Yeah, it's not. Disrespected either way. Had a fair value gap. Gosh. Move down, inverse fair value gap, saying price is going to go lower. We have fair value gap saying price is going to go lower right there. You might see it completely move on down. We're just waiting for the retrace back up into equilibrium and then that push back down. If we're taking shorts in this, I'm going to go ahead and mark all my take profits. Low relative equal lows right there. Good there. Okay. I don't think we can go much lower than that. All of this is our take profits. That's a serious drop too if we go down that low. It depends on what market's got planned. It's currently 9:23. We have 7 minutes for market open. I'm entirely confident in my current strategy right now. We have an inverse here. That works. We have breaker structure there. We're looking for retrace back up into this order block here. On the 30-minute. If it respects this order block here, that'll be good for us. Just have to wait and see. There was no break structure within this. It's just gone down. Retested this level here. We created relative equal lows. Strong confluences saying that when we close up into this, it'll reverse back down. We'll see that break of structure happen, or the breaker block happen. And then from this, we'll see it just continue on down. The hour does not say this, does it? Oh, it doesn't. So on one hand, we could wait for equilibrium to get hit and for it to reverse on back down, or we could wait for that order block to get hit. I am more confident in an order block getting hit than equilibrium. The better trades from the order block. It's not present on the hour for both NASDAQ and the S&P. Only on the 30-minute does that order block appear. We have relative equal lows on both the hour and 30-minute now. Yeah, relative equal lows. Dang near like identical lows here. So let's see if the S&P has the same thing. Not as equal. There's less of a snail trail over here. Lower low here. So if I were to use these notes in an uptrend, right, because we have that broke structure on the hour, if the S&P creates a higher low, that's not the case. It's creating a lower low. While the NASDAQ creates a higher low, price will fall. And the S&T is used to confirm price or trend shift that the all-time high is done. So if this is a correct setup, if this note is correct specifically, we should see price retrace back up into that like we are on the 30-minute. And once it's retraced back up within this zone here, it'll close within this, or it'll come up even further on the NASDAQ, close within this, and we'll see it continue ripping down. I almost want to wait for market open just to see what will happen. We have 2 minutes for that to happen as well. So let's see. Technically on the S&P, we've already come up within this. The retrace happened. It closed right at the 50 mark. We could see price just continue on down. Very curious to know. We're staying on the 30-minute because we have yet to manipulate this low outside of this session. So on market open, one of these two is going to get hit. We'll see this either get closed up within during session, or we'll see a retrace within during session. Same story, closer within, and then continue on down. I think we'll see it on market open that it comes up, closes within, and then we'll see it rip on down. Unless it chooses to straight up reverse on us again. And we see it rip beyond the high. That would kind of suck though. That would remove the whole setup we had going. Don't mind me, I'm going to look at Reddit real quick. There we go with market open. As you can see, we have it coming back up. That's with almost in equilibrium. Let's see what NASDAQ has got. NASDAQ is just ripping on down. Hello, move down. Continuation. It's hit that first. Let's go to the 5-minute. So we were in an uptrend, break of structure, order block. We have this whole move here. We can take a look at order block, move in, close, and then drop potential. We might see this come up within this because it's already gotten that close. Closure and then drop. We got 3 minutes for that to do its thing. Let me go see what news is said so far. Refresh this. Everyone was saying longs here. Then again, they are different pairs. So we haven't manipulated the low here on S&P, but we did on NASDAQ. I think I want to wait. I mean, I have a fair value up here after a break of structure there. think we just got our manipulation. We just got our key level hit here on the S&P. Yeah, we just got it hit. We got a break of structure, order block here. If this is respected, that means price is going higher, but I don't think it will. I think it's actually going to go lower. Sure enough, that's what it's doing. I'm inclined to trade on the NASDAQ. If it closes in the next 2 minutes, 15 seconds, and we have that fair value gap, I'm tempted to press sell on the NASDAQ. Put my stop loss up here, and then write it all the way down. We're going to risk 15 on that. Let's see if we can get this to work. Because we had a break of structure. The entirety of this is that we're in a retrace. Per the hour now, let's go ahead and take a look at that. I'm pretty sure, yeah, we broke structure on the hour. We have a huge order block there. We don't want to put it way up there, so we're going to take it on the 5-minute. And then from there, we'll see it ride down after that massive break. I would like to see it come up, revisit, and then close below. I think we've already got it though. Because we broke structure here, had an order block there, came up within, danced within, closed within. Now we see it dropping below. So break of structure, valid breaker block. We can remove this. And then fair value gap to boot on top of that, showing price is actually going to continue on lower. And due to now market open, we now have high volume prices going much lower. So that works for me. I want this to close though to solidify that fair value gap. Then we'll press sell, put our stop loss above that high, that most recent high, the rest of that breaker block. We'll watch it continue to drop. Where could you be targeting now is my question. I think this is entirely too low. I think we're going to go up to here. That stops me at 21. These are relatively equal lows though, so I'm more inclined for it to go down here. See what that does. And we'll go to the 5-minute just so we're on the same page. And we'll take a look for other prices to hit as well. So we can scale out a little bit quicker than that. Relative equal lows on the 5. Let's go ahead and put one here. Those are relative equal lows there. Kind of a halfway point there. I think this works. I do think price is going to continue lower. Take a look at 30 minute. Anyway, it's got a huge thing of green. We've already beyond that. No more for value gap throughout any of this. I'm in trade now. So I'm going to observe this for a little while just to really observe it. Okay? I'm going to really take it into consideration, everything that's occurred so far. I'm going to pause the video so that way it remains a short one. I'm going to keep reading as I go. I'm going to keep watching this very, very closely. In fact, I'm going to cue this up on my phone real quick. I'll go ahead and pause the video. We took this trade off of a break of structure, a revisit of a breaker block, order block, making it a breaker block on the 5 minute after a key level was hit on the 30 minute and the hour. We waited for a price to solidify the fair value gap, saying yes, continuation on down. We also waited for the key level to get hit within market open. It's since done that. My risk to reward is an okay one. We entered here. Oh, wait. We're not taking longs. Sorry. We are in a short. My loss is up there. My final take profit is right here. That's a 1 to 5 risk to reward. Not bad. Not bad to total. I'm going to pause the video now. I'm going to let it do its thing. I'll be right back. Let's see what market's doing. We'll see what market does. Okay, so it's been a minute. I imagine right before I unpaused there, before that little gap, the light was dark. Hi, I'm much more awake. It is much later in the day. As you can see, we're actually correct on our trade idea so far. We took 1, 2, and 3 take profit so far, and we've recouped. We brought it back from the $5 with just this and this. We're like 50 cents away from breaking even this month. I'm looking for price to take another dip. We have 0.05 of the 0.15 lots remaining from this current trade. I'm looking again for price to dip down a little bit more. If we can hit this right here, I'm satisfied with closing the rest of the position now. My final take profit was all the way down there, thinking, yep, it's definitely going to move that far. It didn't move that far at all. The trade idea is right so far. We're in a downtrend. Yay. I'm looking for price to start moving down much further, though. Oh no. It depends on what price presents. If it decides to present me with a pattern I don't like towards that bottom line, I'm not going to bother scaling out anymore. I'm just going to close the entirety of the position that's remaining. That way I can break even today and then hopefully make some, not tomorrow, but Thursday, because tomorrow, let's take a look real quick while it's doing its thing. Tomorrow, we have FOMC. We can't touch tomorrow. Tomorrow is a big bad no-no. And then Thursday, of course, we have red unemployment, orange Philly Fed, and manufacturing. I'm not entirely. Yeah, I don't want to touch tomorrow at all. So that's the thing. Right now, we're in the right. I'm just waiting. Just wanted to unpause, give that quick update. Technically, I could pull the rest of the position off, and we would be up, I think, $1, if I'm not mistaken. If I'm not mistaken, I think we would be up $1 at the moment. Dollar, maybe 10, 20 cents. So that being the case, I kind of want to wait. I kind of want to wait. I really want to wait. I want to see what happens because I don't want my complacency to cost me this trade. We were in this right here was a huge like market open, not this is where all the volume was. I'm kind of looking for more of that volume because we have seen weakness throughout this, and this is all towards the buy side of liquidity. And I'm very, very curious to see what will happen when this consolidation move. I know that's not consolidating. You get the point, though. The volume, then I want to see what happens when the volume changes to the sell side again. Because if it is a decent amount towards the sell side, we could see even more of a dip, which is what we want to happen. Yeah. That's currently where we are with trade, though. I'm going to pause the video again. I'm going to continue watching up until the end of trade. Once trade has ended and all that fun jazz, done out the way. I don't know if I explained it before or not, so I'm going to explain it now. Yesterday, I posted a video in the description. I don't know if you guys even read those. Essentially saying, stay tuned because I intended to take a trade in the PM. Yeah, I'm not taking a trade in the PM. I can't find anywhere suggesting take a trade in the PM per my strategy outside of TJR, and even TJR is like, you can start from here and do this, do that, and like, I don't know about that one, Chief. Plus, I also have other work to do, so I can't be trading all day every day, just in the mornings and like early afternoons. Late afternoon, I'm extremely busy, so that's just a no-go for me. That being the case, I'm gonna pause the video again. And yeah, I'm gonna wait patiently. BRB. So I'm thinking about closing the position now. We've broke structure here. We're on track to break structure here. We've got 30 seconds for this candle to close on both charts. I want to wait. I want to wait. Confirmation would be this candle here. It's got to close within the range of that red candle. If the retrace doesn't close within and chooses to close beyond, that means it's a false signal. And that price will actually continue lower, not higher. Hey. I wish to wait. We have a minute 25 for this to close. I'm going to let this candle go for a minute. If the next candle decides to go red, I'll wait for it as well. Patience. Patience is a virtue. So we broke structure here, retraced, closed within this order block, moved up. But there has been no continuation confluence outside of the breaker block here. We've since consolidated along that same line. It doesn't know what it wants to do. Very different story on NASDAQ. NASDAQ has created a higher high, where the S&P has maintained its high. So let's take a look at this. And now an uptrend. If NASDAQ, it's based on lows. If the S&P creates a higher low, which it hasn't yet, it's maintained, it's a lower low. And NASDAQ creates a higher low, price will fall. Here's my low. And here is S&P. Lower low. Higher low. Fall. And this is in line with the rest of what I was saying before, that we've been in a green mode for a little while now when it comes to the volume at play. So the result of all this volume at play being on the buy side has to give way at some point. I believe it did when the S&T popped up and we saw the difference in lows from the break. Price will fall. From this low to this low in an uptrend. And from this low to this low in an uptrend. We have not broke structure yet. This has to fall below this to break structure. As far as I'm concerned, it's in the same direction. The trend is currently up. To form a lower low would mean indication of trend shift. Confirmation of that trend shift is going to be a break of structure. We don't have a fair value gap to invert or an SMT divergence to look at. So 75% extension based on this right here from this low up to the most recent high outside of that. It's reached that. So this would confirm that price is going lower. I'm reading about auction market theory using on-chart tools, excluding indicators, and of course the toolbar to the left. So all of these right here, subtract this and subtract all of this mess, right? I'm using conceptual tools to better map out the strategy on the chart outside of indicators and stuff, so that way I'm not confused too much more than I already am about base indicators and of course these tools as are, right? So far it looks about the same. Like, I'm relating all of what I'm reading to what I've known from TJR now, right? And for the most part, it's relatively the same stuff. It's just reworded, and then outside of being reworded, it's also got different names. So comparing and then translating and then fixing is what I'm doing. So there's a little bit of a gap between everything. I'm going to keep watching market. I'm going to pause the video. I'm going to read some of this. I'll make the decision to leave in due time. BRB. Okay, so I've got my gears going, thought process working, right? Doesn't look like I've made it very far into waiting, but thinking is what I've been doing for the majority of the time. The decision was made. I decided to back out of the trade completely. We ended today making that much. Let's go ahead and do this on the calculator real quick. I need to change this over to... not this. I think this one. Yep, this one. So this is where we were yesterday. Okay. So we had minus 5.99. Okay. Just so we're on the same page, let's go ahead and take a look at this. We entered on this one here, so negative 0.15. Minus 0.15. Cool. We added 0.26. We added 0.81. We added 3.14. Hey, look, pi. And then added 1.32. That is a significant difference compared to where we were. So this can get changed. Negative money sign 0.61. That's not bad. That is not money sign. Difference and change all at once. This was a successful day. It could have been more successful had I chose to leave sooner rather than later. I'm confident we could have made an extra dollar today and really canceled out the negative. Yeah. Without new volume coming into the market, I decided, you know what? It's probably best if we did get a break of structure to go ahead and back out of market completely, because at that point, because there is no new volume coming in, what would tell me at this point that price is actually going to move back down? Well, we would have needed a break of structure. Then we would have needed a breaker block. Then we would have needed yada 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 yada. I would have needed an entirely new set of confluence, an entirely new pattern to justify me staying in the market long enough for that break of structure, for that reversal, for that move back down. Without that new volume, can't really do that. So my logical approach was, okay, we've been in the green for a while. We had our move down the way we wanted it to, but we didn't get as far down as we would have liked because there's just not that much volume to bring in. So with that being the case, I chose to cut my loss. We did not take a trade on the S&P today. Instead, we chose NASDAQ because it gave us a little bit more room to improve on trading. It gave us another instrument to work with, and it's similar in correlation to the S&P 500. So that being said, I'm out of the trade today. Today was a successful one. If you're interested in watching any of my other content, all those links can be found down below. And if you're interested in any of the content I post that's not on this channel, go below. The description has it all. If you're interested in subscribing, coming back, watching more, subscribe. Consider liking the video if you enjoyed it. Comment below what you think I can improve on. Comment below if you're familiar with the term auction market theory and can relate the tools to Inner Circle Traders' Smart Money Concepts tools. And I'm not talking about the indicators. I'm not talking about this little toolbar here. I'm not talking about anything you see on the screen. I'm talking in terms of using the Fibonacci tool to determine equilibrium. To this right here, having a breaker block moment, order block, retrace. Oh, it's moving down. We had a similar situation here, break structure, order block, but no retrace, breaker block, and then it just continued falling, right? Comment below if you can compare the two, and if you can, and in what way, per this price movement, per this trend, per what I'm seeing here, would you implement them based on market open to market, not market close? 10:30 is my time to stay away from entering another trade. So if you have any experience with this, let me know. Honestly. Because it was just now brought up to me that ICT and TJR are not reputable, right? And from reading my own, like going into my own study and reading a lot, it's been made clear to me that the two have similar concepts. The strategy are very similar, but the tools used between the two are varied because they rely on two different factors. AMT is more into indicators and recognizing volume over trend, whereas ICT is more about trend and actual liquidity, as well as the differences in price, where it's been, where it might want to go after, right? I've had very little experience with AMT. I have a ton of experience with ICT. And the vast majority of the past 7 months have been working with ICT, TJR to really dial in my own strategy and get this absorbed so well that I can actually make a profit. I'd like to make it to where I'm able to understand both equally to the fairest of points that I can reliably use and or reference both charts for notes, both instances of notes, to better understand the chart and what it might want to do based on those conceptual tools, right? If you're interested in letting me know any of that context or any of that stuff, comment below, books, comment below, comment below whatever, to really help me out, because I'm very, very curious, and honestly help your fellow audience out, because if you're interested in watching this, you know you're going to be interested in actually making money. So that's the thing. Thank you for watching. My name's Orb. I'll see you guys in the next one. Thursday, we cannot trade Wednesday. Just we're on the same page. Take a look. Wednesday's a no-no. Stay away from Wednesday. Thursday's okay. We're not trading tomorrow. Stay away from Wednesday. Okay? Okay? Okay. Thank you for watching. Again, see you guys in the next one. Peace.